Welcome to this deep dive into the world of Bitcoin and its potential valuation in 2025. Over the years, Bitcoin has evolved from an obscure digital currency to one of the most discussed and sought-after financial assets in modern history. It has been praised as the future of money, dismissed as a speculative bubble, and debated endlessly by economists, policymakers, and financial experts. But what will Bitcoin be worth in 2025? Will it reach new highs? Will it become the world's primary store of value? Or will regulations, market forces, and technological changes alter its course? Today, we're going on a journey to understand Bitcoin's future value, its past market cycles, its role as digital gold, its adoption by governments and institutions, and the forces that could propel or hinder its growth. Chapter 1. The Rise of Bitcoin, a Financial Revolution. Bitcoin's story begins in 2008, in the midst of one of the worst financial crises the world had seen since the Great Depression. A white paper titled Bitcoin, a peer-to-peer electronic cash system, was published by an unknown entity under the pseudonym Satoshi Nakamoto. The timing was significant. Trust in banks and financial institutions had been shattered. Governments had bailed out major financial institutions, while ordinary citizens suffered economic hardship. People began questioning the very foundation of the financial system. Bitcoin was designed to be the solution, a decentralized currency that no central authority could control, manipulate, or print endlessly. It was built on blockchain technology, a transparent, immutable ledger that recorded all transactions securely and publicly. Despite initial skepticism, Bitcoin gained traction among cryptographers and libertarians who saw its potential. Its first ever market price was determined in October 2009 when one Bitcoin was valued at around $0.0008. Then, in 2010, a programmer named Laszlo Hanyecz made history by purchasing two pizzas for 10,000 BTC, marking the first recorded commercial transaction using Bitcoin. At today's prices, that transaction would be worth hundreds of millions of dollars. From there, Bitcoin's journey took off, experiencing cycles of massive booms followed by sharp corrections. 2011 to 2013, Bitcoin reached $1 for the first time, then surged to over $1,000 before experiencing its first major crash. 2017 bull run, Bitcoin soared to nearly $20,000, driven by growing retail interest, ICO hype, and increasing mainstream awareness. 2020 to 2021 boom, fueled by institutional adoption, stimulus-driven liquidity, and inflation fears, Bitcoin reached an all-time high of nearly $69,000. However, after every bull run, Bitcoin faced severe downturns. The crypto winter of 2018 and the bear market of 2022 to 2023 reminded investors that Bitcoin remains a highly volatile asset. Now, as we enter 2025, the question is, are we on the cusp of another historic bull run, or will external forces dampen Bitcoin's growth? Chapter 2. Bitcoin as the ultimate store of value. One of the key arguments for Bitcoin's long-term success is its role as a store of value, much like gold. But why is Bitcoin often referred to as digital gold? 1. Scarcity, the 21 million limit. Unlike fiat currencies, which governments can print endlessly, Bitcoin has a fixed supply of 21 million coins. This makes it a deflationary asset, meaning that over time, as demand increases and supply decreases, Bitcoin's value is expected to rise. Currently, about 19 million Bitcoin have been mined. The last Bitcoin is expected to be mined in the year 2140, meaning that supply constraints will continue to shape its price over the coming decades. 2. Decentralization and censorship resistance. Bitcoin is not controlled by any government, bank, or corporation. Its decentralized nature ensures that no single entity can manipulate its supply or transactions. Unlike traditional banking systems, which can freeze accounts, impose withdrawal limits, or devalue currencies through inflation, Bitcoin gives users complete control over their money. 3. Portability and security. Gold has been used as a store of value for centuries, but it has its drawbacks. It's heavy, difficult to transport, and can be confiscated. Bitcoin, on the other hand, can be stored digitally, moved across borders in seconds, and protected by cryptographic security measures. This makes it a superior asset in an increasingly digital and globalized world. For growing demand amid inflation and economic uncertainty. In an era of rising inflation, excessive money printing, and global economic instability, Bitcoin is increasingly seen as a hedge against fiat currency devaluation. Central banks worldwide have flooded markets with liquidity, reducing the purchasing power of traditional currencies. Meanwhile, Bitcoin's fixed supply ensures that it remains resistant to inflation, much like gold, but with added advantages. As more individuals and institutions seek to preserve their wealth, Bitcoin's appeal as a safe haven asset continues to grow. Institutional adoption, the new era of Bitcoin. While early Bitcoin adoption was driven by individuals, today, major institutions and corporations are getting involved. In the past few years, financial giants like BlackRock, Fidelity, and JP Morgan have started offering Bitcoin-related services. 1. Bitcoin on corporate balance sheets. Companies like Tesla, MicroStrategy, and Square have integrated Bitcoin into their financial strategies, using it as a treasury asset to hedge against inflation. MicroStrategy, led by Michael Saylor, has been one of the biggest proponents of Bitcoin, acquiring billions of dollars worth of BTC. 2. Bitcoin exchange-traded funds, ETFs. Bitcoin ETFs allow traditional investors to gain exposure to Bitcoin without having to manage private keys or deal with cryptocurrency exchanges. With ETFs being approved in multiple countries, institutional investors have easier access to Bitcoin than ever before, driving up demand and reducing volatility. 3. The role of governments and central banks. Several governments are now rethinking their stance on Bitcoin. El Salvador became the first country to make Bitcoin legal tender, integrating it into its national financial system. Other nations, especially those facing economic instability, are exploring Bitcoin as a reserve asset. Some central banks have even begun discussing the possibility of holding Bitcoin as part of their foreign currency reserves. As Bitcoin's legitimacy continues to grow, the barriers preventing institutional investors from entering the space are rapidly disappearing. The 2024 halving, how it shapes 2025's Bitcoin price. One of the most critical factors influencing Bitcoin's price in 2025 is the Bitcoin halving. Bitcoin undergoes a halving event approximately every 4 years, reducing the block reward for miners by 50%. 2012 halving. Bitcoin rose from $12 to over $1,000. 2016 halving. Bitcoin surged from $650 to $20,000. 2020 halving. Bitcoin skyrocketed from $8,000 to nearly $69,000. The 2024 halving has already taken place, meaning the rate of new Bitcoin entering circulation has been reduced. Historically, halvings have been followed by major price increases due to supply and demand dynamics. With less Bitcoin being mined and demand increasing from institutions, will 2025 see another massive bull run? At this point, we've covered Bitcoin's evolution, store of value thesis, institutional adoption, and the impact of the halving. In the next part of the script, we will explore Bitcoin price predictions, challenges, risks, and what the future holds. Bitcoin price predictions for 2025. With Bitcoin's fundamentals stronger than ever, analysts and investors have made bold predictions about its price trajectory in 2025. However, estimating Bitcoin's price isn't just about looking at past trends. It requires understanding macroeconomics, adoption rates, regulatory developments, and investor sentiment. Let's break down some of the most widely discussed Bitcoin price scenarios for 2025. Bullish scenario, Bitcoin surpasses $250,000. Many analysts believe that Bitcoin could eclipse $250,000 or even $500,000 by 2025. This bullish outlook is based on several key drivers. Institutional demand. If major hedge funds, pension funds, and corporations allocate just 1 to 5% of their portfolios to Bitcoin, demand could skyrocket. Global adoption. More governments embracing Bitcoin as legal tender or as a reserve asset could further push its value. Inflation hedge. If traditional currencies continue losing purchasing power, more individuals will flock to Bitcoin as an alternative. The 2024 halving effect. Historically, halvings have led to supply shocks and massive price increases within 12 to 18 months. If Bitcoin follows a similar pattern to past cycles, we could see its price surge beyond $250,000 by late 2025. Moderate scenario, Bitcoin between $100,000 and $150,000. This is the most widely accepted prediction by analysts and institutions. It assumes a steady but not explosive rise in adoption. Institutional investors increasing their exposure, but with some regulatory hurdles. Bitcoin benefiting from inflation concerns, but traditional markets still dominating overall investment strategies. The Bitcoin halving leading to price appreciation, but at a slower pace than in past cycles. Under this scenario, Bitcoin's market capitalization would be approximately $2 to $3 trillion, putting it on par with gold in terms of store of value credibility. Bearish scenario, Bitcoin below $80,000. While unlikely, some experts argue that Bitcoin may struggle to reach new highs due to regulatory clamps, governments imposing harsh restrictions on Bitcoin ownership, taxation, or mining operations. Economic recession, a major global financial crisis causing liquidity to dry up, forcing investors to sell riskier assets like Bitcoin. Technological disruptions, the rise of alternative blockchains or central bank digital currencies, CBDCs, that reduce Bitcoin's appeal. In this scenario, Bitcoin could remain range-bound between $60,000 and $80,000, facing significant resistance to breaking new all-time highs. Regardless of which scenario plays out, one thing remains certain. Bitcoin continues to solidify its position as a financial asset unlike anything the world has seen before. Bitcoin's biggest challenges and risks. Bitcoin's journey hasn't been without challenges, and 2025 will be no different. Let's analyze the potential threats that could impact its growth. Regulatory uncertainty. One of the biggest hurdles for Bitcoin is the ever-changing regulatory landscape. Some countries, like El Salvador, have embraced Bitcoin. Others, like China, have imposed strict bans on mining and trading. The US and European Union continue debating how to regulate Bitcoin without stifling innovation. In 2025, clear regulations could provide Bitcoin with the legitimacy needed for institutional investors to go all in. However, if major economies introduce hostile policies, it could temporarily hinder Bitcoin's growth. Bitcoin's volatility, can it ever stabilize? Bitcoin is notorious for wild price swings. While volatility creates trading opportunities, it also makes Bitcoin less practical as a daily currency. For Bitcoin to become a true global financial instrument, it may need to stabilize. The question is, can this happen, or will Bitcoin always remain a speculative asset? One possible solution is the rise of Bitcoin-backed financial products like ETFs, futures, and stablecoin integration, allowing Bitcoin's volatility to be managed more effectively. Scalability and energy consumption. Bitcoin's network processes about 7 transactions per second, TPS, far lower than traditional payment systems like Visa or MasterCard. To address this, developers have built Layer 2 solutions like the Lightning Network, which enables faster, cheaper Bitcoin transactions. Bitcoin mining's energy consumption is another hot topic. While Bitcoin uses renewable energy at increasing rates, critics argue that it still consumes more electricity than some small nations. In 2025, continued innovation in energy-efficient mining and sustainable solutions will be crucial to Bitcoin's long-term success. Bitcoin and emerging markets, a new financial revolution. Bitcoin isn't just an investment asset. It's becoming a tool for financial inclusion. In countries suffering from hyperinflation, currency controls, and economic instability, Bitcoin provides a way to store and transfer wealth without relying on corrupt or unstable banking systems. Countries in Africa, Latin America, and Southeast Asia have seen surging Bitcoin adoption as millions of people turn to Bitcoin for remittances, avoiding high transaction fees when sending money across borders, protection from inflation, holding Bitcoin instead of depreciating local currencies. Financial sovereignty, being able to store wealth without government interference. As Bitcoin adoption grows in developing regions, its role in the global economy will become even more significant. The role of Bitcoin in 2030 and beyond. While we focused on 2025, it's worth considering what Bitcoin's role might be in the next decade. Scenario 1. Bitcoin becomes the world's reserve asset. Governments begin accumulating Bitcoin in their central banks. Nations with failing fiat currencies adopt Bitcoin as a replacement. Traditional finance fully integrates Bitcoin, making it part of mainstream investment portfolios. In this scenario, Bitcoin could be worth millions per coin, serving as the foundation of a new decentralized financial system. Scenario 2. Bitcoin coexists with centralized digital currencies. Governments introduce central bank digital currencies, CBDCs, as state-backed alternatives to Bitcoin. Bitcoin remains a hedge against inflation, much like gold, but doesn't fully replace fiat currencies. Global institutions like the IMF and World Bank start holding Bitcoin reserves. In this case, Bitcoin's price could reach $500,000 to $1 million per coin, while still being used alongside traditional assets. Scenario 3. Bitcoin faces competition from new technologies. Alternative blockchains with faster speeds and greater utility challenge Bitcoin's dominance. Governments impose harsh regulations, making it difficult to use Bitcoin legally. The global economy shifts toward quantum-resistant or even AI-driven financial systems. While unlikely, Bitcoin would still maintain value as a historical and scarce asset, though its dominance in the crypto market could shrink. Final thoughts? What's next for Bitcoin? Bitcoin in 2025 is more than just a financial asset. It's a movement, a revolution, and a new form of digital sovereignty. While price predictions range from $80,000 to $500,000, Bitcoin's real value lies in its ability to empower individuals, resist inflation, and reshape the financial system. What do you think? Will Bitcoin reach new highs? Will it become a global reserve currency? Or will external forces slow down its progress? Let us know your thoughts in the comments below. If you enjoyed this deep dive, don't forget to like, subscribe, and hit the notification bell for more insights into Bitcoin, crypto, and the future of finance. Until next time, stay informed, stay curious, and keep exploring the world of Bitcoin.